All right, welcome back to another market recap and a look ahead. And if this is your first time to the channel, don't forget to hit the like button. This is Chris Trade. Okay, so yeah, this is going to be a short one. I actually have a bit of a hangover, which I'm busy nursing. And then I've still got to try and edit this thing. Yeah, it's not good for the eyes. So I want to try and get that done and then carry on nursing my headache. So yeah, NASDAQ, all-time record highs. Dow Jones, all-time record highs. S&P 500, all-times. Russell, all-times, record high, record highs, record highs. Just carry on, record highs. It's just insane. And then we got crude oil doing very well. Okay, closed off into the green. Brent closed off into the green, yeah. Unfortunately, gold is under slight pressure. Not a lot of love lately. And the reason really for that is because money is just flowing into your risk on assets. Everything to do with your NASDAQ, your Dow Jones, your S&P. I mean, everything's going into technology and communications, even healthcare. So gold currently is just a risk-off asset right now. However, you've still got to keep your eye on gold because gold is by default a insurance at the end of the day. I mean, this cannot simply keep going up and up and up without any form of major correction coming into place. It's bound to happen, and it will happen. And by the time that happens, because you can't really time it, but when it does happen, you want to be in gold. You also want to be in crypto at that stage. But crypto will feel it a bit. But predominantly, gold will actually be quite a good cushion. Listen, folks, you've got to have an exit strategy. You've got to have an exit plan. You cannot expect us to keep going up higher and higher and higher indefinitely. It's just unnatural. There's got to be a major pullback, and when it does come, you already want to be positioned with gold, or at least have some money in gold just to cushion any of losses that you would have experienced while you getting out of these type of markets. All right, and that's really what gold is. You've got to have an exit strategy. You've got to have an exit strategy for cryptos. You've got to have an exit strategy for all your assets, actually. And gold does prove to be quite a good exit strategy for all of these assets. All right, so gold, just remember, is risk off currently. You want to just be parking some money there. But currently, we are in risk on. And that's, as you can see, we are just breaking record highs, record highs, record highs. And again, record highs. Okay, so let's have a look and see what's lined up for next week, and then we can start judging and seeing what we can expect in the markets, particularly for Monday. Okay, so we've got some really interesting reports coming out that's going to give you quite a good indication of how the US economy is actually doing. And typically what would happen if the economic news is bad in terms of your manufacturing, your construction spending is down. This is not good news for the states or the health of the economy, of the US economy. And the markets actually like that, because what that means is that the Feds will have to keep pumping heroin into the markets. And the best way to view the current situation right now, and particularly the US market right now, is a drug addict. And the best way to keep a drug addict happy is if you keep feeding it drugs. And the best way for a drug addict to throw his tantrum or his toys out the cot is to obviously deny him his drugs. And that's pretty much how the stock market is currently working. If you get bad economic news, that means that the Fed will keep pumping money and giving drugs into the economy, well, into the stock market, right? However, if the economy starts improving and keeps going and keeps going, that's not really good news for the drug addicts, because that just means that the drug addict has to start weaning off from its drugs now, which means the Fed giving money. So you want to start paying attention to all of this. So to give an indication here, a higher reading for the ADP employment report is actually bullish for the US dollar. However, a lower reading, so if it falls below the previous reading, that's actually very bearish for the US dollar. All right, so this is why these indicators are so vital in terms of how the markets will actually be moving. And as you can already see, that a weaker US dollar is actually good for the market because the market does not like a strong US dollar. And it bodes well that the market will then go up. Unless you have a strong US dollar, typically the markets will go down. But of course, you want to have a look at core capital goods. Factory orders is very pivotal in finding out what is going on with the economy. But then we've got Wednesday, which is going to be a very important press conference by Jerome Powell. So just watch how the markets actually stand still worldwide in anticipation for Jerome Powell's press conference. It's fascinating how much power is rested in one person to move markets. It is absolutely incredible. All right, so Wednesday is extremely pivotal. So just watch how that money moves. Typically, you'll see it moving into safe havens, and you will actually find it moving either into the US dollar. So you could expect a bit of a strong US dollar when he does his press conference, well, just before. And you would also see money just going into the debt market, the bond market, just slightly rising up. People just positioning themselves prior to Jerome Powell's press conference. So just watch that. Just watch how the money flows there. It is very fascinating. And then, of course, you got Thursday coming up, so you want to just pay attention to the labor cost share. Initial jobs claims is very important in terms of the state of the economy, or the US economy. Then again, the payrolls, unemployment rates. So very key indicators in terms of how the US economy is actually doing. But overall, what you want in terms of investing in the markets here is that these reports end up, by and large, the majority of them are actually bad. That's what you want, because that will indicate that the market will just go up, because the market is very sadistic in that sense. Like I said, it's like a drug addict. This means that the Feds will carry on stepping in, feeding heroin into the market, basically. Okay, so one last indicator I just want to have a look in terms of where the markets will kind of be on a Monday and what to expect for the week. So as you can see, Dow Jones, this is the futures, by the way, and this is all in green. Dow Jones, S&P, the Nasdaq, the Russell, all in green. This is really good. All right, so if I just go back here, all right, I am expecting a bit of a good start for Monday. However, I'm a little bit cautious about the US dollar just being a little bit strengthened there because it doesn't play really well against the Nasdaq and the Dows. As mentioned, the market just doesn't like a stronger US dollar. So, but overall, I am expecting a little bit of a good opening actually on Monday, simply because crude oil is propping up all of this. And overall, I'm expecting more record highs. Again, it's going to be very interesting to see what Jerome Powell has to say in his press conference on Wednesday, depending on how the markets react to it. Don't be surprised if you end up getting another record high in terms of that, or you could see the markets just come a little bit flat there. But it all depends on what comes out of his mouth and how the markets kind of review that. There is going to be some pressure coming soon for crude oil. And if we have a look currently what's been happening, oil prices rebound, edge up ahead of next week's OPEC meeting. So this is quite an interesting meeting because there's going to be discussions about just adding a little bit more supply in. Now, Iran is going to be putting in more supply now into the market. So that's something just to watch. It might just add a little bit of pressure. I know from a gas point of view, Russia is looking to supply more into the markets, particularly more into Europe. So I do see your natural gas being put under a little bit of pressure. But it just also, this is going to be quite pivotal next week, depending what OPEC is doing. But there seems to be a little bit of pressure in terms of just adding a little bit more supply into the market. But it's not going to be much. So you could expect crude oil just to come slightly down a little bit and then potentially shoot back up. So it'll be interesting to see if that happens this week. But if not, you should see that repercussions coming in the following week. And of course, the pressure will keep coming onto crude oil. This is an article from Al Jazeera. Energy crisis. UK consumers face rising fuel poverty this winter simply because of the surge in prices. But the overprinting of money worldwide, which has helped increased inflation. And of course, this has all been blamed now on energy, particularly oil. And of course, this is all going to be felt through this weekend where we had like the G20 in Italy itself. So again, they were tackling the energy crisis and climate control and vaccines and things like that. There was actually quite mass protests, if I just go over here, pretty much around the world, from New York, Paris, Rome, Trieste, if I pronounced that correctly, and Bern, Rome, Dublin, even in Cape Town, and many more. And really a lot of this stuff wasn't covered in the media, but you can see mass protests against vaccine passports across the world, and yet the media ignored it, and it just carries on and carries on. And that also gives us to the next topic, which is the COP26, the COP26. So the world makes new bid to avert climate disaster. So that's actually today. So all the world leaders were really in Rome. So they're flying into Glasgow, Scotland today, and to tackle this climate crisis that we seem to be having. So that's going to be interesting to see what's going to come out of here. What is also very interesting. Right, if we have a look here, we got the spending bill marks largest U.S. climate investment, but the job is not done. So reconciliation legislation provides $555 billion in climate and clean energy spending. All right, so we can see here, so this package announced by Biden yesterday, this was actually on Friday, calls for that amount in climate and clean energy spending, making it the largest climate investments in American history. All right, so there's big money. So the market's going to love this kind of stuff. All right, so there's going to be big money going into the energy sector in terms of your solar and wind panels and things like that. All right, so it's a good chunk of this 1.75 trillion budget deal. But uranium will also be part of this. So is this going to be really good for the uranium stock side? Okay, so Bitcoin seems to be, it's been hovering really around close to the 60,000 mark. It did do a bit of a high up to 63,000, and then, it's just coming down currently right now. But as you can see, this was actually in a wedge formation and just broke out. It's just retesting here. So those who actually missed you might want to just look at entering a position here, because you could see this potentially shoot back up, and that's ultimately what will happen. As explained in my previous video, what Bitcoin is doing here is very healthy. It's simply just trying to form another leg up higher, and it will go up higher. All right, so just keep an eye out on that. That's pretty much my market recap and look ahead. All right, this is Chris Trade. Peace.